last month we saw bearishness on the seasonal chart. What do we see for this month? Now, what we do is, when we look at seasonals and we look at them about once a month on here, I'm looking at something called the money calendar. Now, most of you that are watching this know that I have this money calendar, and maybe some of you are new to it. So let me explain what we look at here. It looks just like a calendar. However, I don't have to-do lists on my calendar. I don't have appointments on this calendar. I don't have Labor Day's coming, so get ready to close up the pool. Let's do one more pool party and then it's over. Not on this calendar. This calendar gives me stocks, and it gives me stocks that have been in at least a 10-year pattern. I'm looking for stocks that at least 9 out of 10 years, that pattern has been either up or down. I mostly like to look for up patterns. Those are green days. When I find a green day, that means that there's more stocks within that day that have seasonal up patterns than down. So what I do is I go into each day and I look for opportunities. When I go into a particular day, it brings up this information for that particular day on stocks that have met those patterns. And I'll see a green bar and I'll say, all right, that's a bullish bar. I see a red bar and I'll say, all right, that's a bearish bar. I'll look at how long that pattern is. I'll look at when the end date is. I'll look at the accuracy, at least 90%, sometimes 100% we see. I will look at the profit, the average profit it brings in, because the bigger that number is, the more interested I am in looking at that actual pattern. Probably one of the most important things I look at is something called our power meter. It tells us which of all these stocks that have these great patterns, 90 or 100%, are really pushing patterns that are making money more recently than, say, 10 years ago. That's what we call our power meter. Now, let's talk about the three tails of September. This is what the money calendar looks like when I go in and I look at just opportunities that are 20 days or less. See all the red that's on the screen? It means that most of this is bearish. So think of the short-term opportunities as the ones that are still having high volatility, the ones that, and with shorter term, it's harder to really get a move anyway. And if I'm going to be bearish, I'd rather be bearish for the short term, because bear markets and bear moves happen with less time in them. Higher volatility, less time. We saw that happening in August. We saw August markets drop double digits, and it did it within a week and a half, 2 weeks tops. So 20 days or less, this is what the calendar looks like. It doesn't start to get green till the end of September. However, when I'm looking at, say, stocks that have 20 to 40-day patterns, all of a sudden it shows the first, call it 2 weeks, where we have more bearishness, and the last 2 weeks of September will get to be more bullishness. And then finally, when I look at the longer term, let's look at 40 days or more. When I'm looking at patterns that start anywhere in September and have 40 days or more from that start date to its end date, then the majority of the screen is green. So what does that tell me? That tells me if I want to be a longer term trader, if I want to look at the calendar and I want to look at seasonality that takes us past September, that takes us into October, maybe even into November, then I'm going to find more opportunities that are bullish than bearish. Let me show you some of the opportunities that we have in that 40 to 60-day time period, where we were looking at accuracy of 90% or better, where we had a power meter that was above zero. That means it was a positive power meter. That means that the trends were happening more in the recent years than they were in the past years. What you can see here is I picked this from the first week of September. I picked it on September 5th. And what you can see is Decker Outdoors is on here. That's a 58-day trade, and it's showing an average return of 8.6%. All right, but it goes all the way out to November 25th. So this is taking us out to almost Thanksgiving. Then you've got FIS and NLY. Those are bearish trades. So even in the long-term bullish stuff, we're still finding some bearish opportunities, right, that go out to in the beginning of November, and then NLY is the end of October. The last three trades, ACGL, SPG, HLT, all 90%ers. all are, having average returns of 5.5 to 8, over 8.5%. All have 90% probabilities. But again, you're talking about trades that are taking us to the middle to the end of November before you get to its end date. So I thought I would share with you at the end of this seasonality piece, not only what the calendar looks at short, medium, long term, but also I wanted to talk about what was going on when you pick a spot on the longer term calendar in the first week of September. So again, our takeaways here is that the money calendar is bearish on the short term trades, 20 days or less. It's kind of mixed results on the 20 to 40 days out. And when you go 40 to 60 days, that's where you find the majority of the long-term opportunities. Hey, if you want to receive opportunities with my seasonal picks featured in the money calendar, then click on the link in the email that came with this video. And thanks for watching.